Welcome along, everyone. Thanks for joining me this evening on the Squirrel Investments webinar. Uh, I'll be overviewing a whole bunch of things that we've got going on and talk a bit about what's going on in the market. Before I do that, there's this wonderful disclosure statement that I'm sure you'll all enjoy reading. We will publish a recording of this webinar along with the Q&A from this morning's session next week. And if you really want to read this in detail, feel free to go to the recording that we publish and you'll be able to go back to this and look at it in some detail. All right. Agenda today. So I've got about 20 minutes of presentation material and then we'll move into Q&A. Topics I'll be covering, a bit about interest rates, what's going on in the market and where Squirrel's interest rates are at for our investors. I'll be making some comments on the housing market, what we're seeing there. We'll talk about some investment platform updates also, and then move into Ask Me Anything. As I said, don't be afraid to ask questions as we go, and I'll get to those when we get to the end. Starting with interest rates. Clearly, we're in an easing cycle of interest rates. So interest rates have been relatively high, as you can see from the graph there, which goes back over 20 years. This is the 1-year term investment rate over that period of time. So today, that is a touch below 5% for what the main retail banks are offering us. So yeah, and you've seen that fall quite a bit just in the last 3 or 4 months. What do we expect to happen from here? I think we'll see that 1-year term deposit rate fall a little bit further yet. If we look at what's going on with the longer term interest rates, so 3, 4, 5-year, actually they've fallen but then stabilized, and if anything, have actually popped back up a little bit since the US election. I guess economists and forecasters are looking at the potential plan of what's going on in the US and saying that could be slightly inflationary. And as a consequence, interest rates may need to stay a little higher. It has less impact on New Zealand's short-term interest rates. So, the 6, 12, 18, perhaps out to 24 months. So I think we'll see those ones keep tracking down, but those longer rates, maybe they've done their dash. Maybe they're not going to come down like we thought or hope that they might. All right, moving on. So where are Squirrel's interest rates at? So this is as of yesterday when I checked the market. So with our on-call account, our interest rate is 4.5% per annum. The best of the main banks is BNZ at 420. Some of the other banks are in the twos. So if you're with some of the other banks, make sure you're looking around and making sure you're getting the best value for money that you can. For our on-call interest rate, we expect that that's going to track roughly in line with the OCR. So Reserve Bank makes an announcement tomorrow. The expectation in the market is for a 0.5% cut. If that takes place, then it's highly likely you'll see the Squirrel on-call rate fall to 4%. So that's what I'd expect to happen, and that would happen on Thursday. For our term investments, if we use the main bank's 1-year term investments as a benchmark, I'm not trying to compare across products here, but it's a useful guide. BNZ, best of the main banks at 4.95%. The others were scattered around 4.85% or thereabouts. But yeah, BNZ best there. Our Squirrel Monthly Income Fund for the month of November is going to return about 7%, give or take, per annum. Our home loan term investments are currently at 6.5%, and Squirrel construction loan term investments are at 7%. Post the OCR announcement, we will be reviewing our home loan and construction loan lending and investment rates. Assuming there's some cut then of the OCR, it's highly likely that we will make another cut sometime before Christmas, but clearly we'll communicate what that is and how that's going to happen as it unfolds. So keep an eye out for that. Turning to the housing market now, what are we seeing out there? So sales are up a little bit, but they're not rocketing by any stretch of the imagination. We're seeing investors and first-home buyers both been making up a relatively large proportion of what's going on in the market. Investors have certainly come back in. So if you look at the graph on the right-hand side, the orange line is the proportion of investors buying, or sorry, let me rephrase that, the investors' proportion of settlements in the market or expected settlements in the market. So you can see that orange line has picked up from a low of around 15% and is now firmly above 20%. That's happened over the last sort of 6 months or so. We've seen that movement upwards. First home buyers, encouraging when you look at this picture, which looks back over 10 years, to see them as a share of who's buying in the market is rising. That I think is a good thing for New Zealand. Home ownership and if you look at a lot of this, the longitudinal studies around home ownership and the importance of that for all sorts of other social and financial metrics is generally a good thing. There is lots of stock on the market. So there are a lot of houses out there for sale right now. It's a combination of, I think, people leaving New Zealand, less people arriving in New Zealand, and developers finishing developments, which they're trying to sell down. So it's a bit of a perfect storm out there at the moment. That certainly means that prices aren't going anywhere. So they're very stable from what we're seeing through our mortgage advice team. That's kind of, I'll call it up to the minute type information. And there are definitely some sellers out there that are under a bit of pressure in different parts of the market. So worth doing your best to negotiate if you're in the zone of buying right now. So that's what we're seeing. Our mortgage advisors are pretty busy right now. So yeah, I think we'll see some of the numbers from the real estate agencies and Reserve Bank data. When that data starts coming out post-Christmas, I think we'll see that November and December are probably reasonably strong months. They're certainly not, we're not talking gangbusters here, but certainly improving. All right, moving on. So next one, this one looks at the amount of lending that's going on in the market now. Clearly, house sales doesn't necessarily equate with lending, but this data from the Reserve Bank gives you a pretty good view of the amount of lending activity that's going on. Clearly, house prices have an impact on these numbers. And house prices today are a lot higher than they were 10 years ago when this graph starts. So, overall volumes are still relatively weak. They're not even back at averages or anything like that yet. We are starting to see things trending up a bit though. This is the strongest that line's been for at least a couple of years. If you give that graph a Mark 1 eyeball. So yeah, the amount of debt being taken on is increasing. You can argue whether that's a good thing or a bad thing, but we know when homeowners take on housing debt, that tends to be stimulatory for the overall economy. Okay, so what's going on at Squirrel if we use some of our marketplace information? So since April this year, we've seen more investors investing more money. So we've seen a lot more turnover through our market. Squirrel's been struggling to keep up then with the demand that we've seen for our home loans, construction loans, and personal loans. Slightly different story between those two groups. So with home loans, we're settling new loans regularly and passing them into the market. The wait times for investors are typically less than a week. For our construction loans, it's been running in the 1 to 2 week space. Looking at some data this morning, I can tell you the construction loans are at about a week at the moment. Based on what I expect we're going to settle over the remainder of this week, I would say those queues are largely going to disappear by the end of the week for home loans and construction loans. So when you invest, you'll be back to investing very rapidly, same day, sometimes within 60 seconds. For personal loans, slightly different story there. We're still struggling to originate enough loan volume to meet investor demand. So those queues are moving quite slowly. It's taking months in some instances to get invested. So if you're looking to get money invested with Squirrel, then home loans and construction loans are the place to be, or via the Squirrel Monthly Income Fund, where you're invested straight away. We are reviewing our personal loans and what we do in that space because I think what we're doing today isn't sustainable for investors, albeit that we're offering what we believe is a pretty good product on the borrower side. So we know we're not doing a good job there or not as good as we could do. We're reviewing that at the moment, and I suspect we'll be out chatting with you in February or March on what we do next in that space. Key thing overall is we won't compromise on the quality of borrowers that we're taking on board as we increase our lending volumes. Moving on to the Squirrel Monthly Income Fund. A bit about how tax applies to the fund. We've seemed to have had quite a few questions in that space, so this gives you an overview of how that works. So PI tax is paid in April each year, and it's not deducted as you earn. There's a benefit there for investors, which is that you effectively get to earn interest on that tax that's due over the course of the year. So it makes it quite a tax efficient product for most investors, because you don't end up paying that tax till the end of the year, and you can keep earning returns on that taxable amount during the course of the year. This applies both to investors who have their distributions paid out into their Squirrel on call account and those that have their distributions capitalized back onto their investment. So when we get to March this year, so probably early to mid-March, we'll be communicating with investors in the monthly income fund, and we'll be letting you know what the estimated amount of tax that is due, and that tax that's due by about mid-April. As far as the mechanics of paying that tax, we expect we're going to be deducting that from your fund investment balance and paying that to IRD on your behalf. So I guess there's two thoughts there. The first one is, if you want to try and maintain your balance, you'll know how much tax, or roughly how much tax is due, and you can make a deposit to cover that, to keep your balance where it is. Otherwise, you'll see your monthly income fund balance reduce a little bit to cover that tax. We'll manage all of the operational mechanics of that for you and get that money off to IRD on your behalf. All right. Hopefully that was clear. Happy to take questions on that one. Next up, investor roadmap. So we're looking to make it easier for companies and trusts to register and invest with us. I guess we've observed that there's quite a few companies that have been registering and taking advantage of the Squirrel on call account and the interest that they can earn there. We're seeing companies do things like hold their money that they need to make for provisional tax in that Squirrel on call account. Good place to park it and earn a return better than what you can get at most of the banks directly. And we're also seeing people who invest via companies and trusts registering those. So at the moment, our processes are quite manual in that space, and we're going to be digitizing that. I expect that those changes will be live by about mid-December for people who are wishing to register a company or a trust to invest with us. A really big piece of work that's been going on for actually longer than I care to admit is the ability to have multiple on-call accounts. There's a whole range of features that we're planning that all go together. It also delivers a simpler experience than what we have today and makes things like auto reinvest work better than it does today. I'm actually pretty enthusiastic and excited about where this has got to. We've finished the design work, and I expect we're going to be starting to build this post-Christmas. We'll roll out some small feature improvements and changes between now and about April, and then we might go a bit quiet for a while we package up this big lump, and we have to deliver that in one go. So I expect, I'll say the middle of next year, which could mean it's anywhere from about June to August at this stage, is when we'll deliver that new experience. Really excited about it. I think there's some fantastic features for our investors, and it's taken a long time for us to get there, but I'm really excited about what we've seen. There are some investors who have seen this already and like what they're seeing. They've helped us with our design process. Of course, if you want to stay up to date, you can have a look on squirrel.co.nz. We have blogs that we post there on a regular basis about what's going on in the market. I've had two that I've had my hands on in the last week that have been published. One relates to looking at 6 different fintechs, including Squirrel, in the market, and what we've delivered in the savings space and driving competition relative to the main banks. It also points out some of the differences between each of those providers and the approach that they've taken. For example, the risk grades of the banks that they're investing with, for example, does vary quite a bit. And in the case of Booster, it's a managed fund. So you see some different stuff there. So that's worth a quick look. And the other one actually looks a bit more at the housing or lending side of things. We saw one of the banks step out and try and increase interest rates on home loans last year in the middle of the year. and were wholly unsuccessful. So I've put together some data which shows what the problems were and why that didn't work, which also suggests that having a greater share of loans going through mortgage advisors in the market is actually driving improved competition for home loans, believe it or not. We have a YouTube channel, so you see all sorts of stuff posted on our YouTube channel. You'll see John Bolton, JB, our founder, puts stuff on there about interest rates on a regular basis, often weekly. And we'll have, there's podcasts that go out, and clearly we've got stuff going on Facebook and Instagram if that's your thing. Nearly there, team. We passed 9 years old for Squirrel Money just a couple of weeks ago. So 15th of November was when we first wrote our first loan in 2015. Squirrel, the company, is actually about 16 years old, having started in 2008. So the company's been around a bit longer than the lending and investment business. So what's happened over that 9 years? Well, our investors have earned every cent of interest on time, and every cent of capital has been repaid to them during that period. So, hey, we'll chalk that up as a win. 45 million of interest, and I think that's gross interest, has been earned by investors over those 9 years, which is a pretty decent lump of money when you think about it. We've lent $800 million. Today, we have about 375 million of investor funds under management on the Squirrel platform. And there's about 4.1 million in reserve funds that have been built up. That's across the different pots of reserves that we hold. So yeah, I thought there's some stats worth sharing with you. The other milestone that we've just crossed is the Squirrel Monthly Income Fund had its 3rd birthday. Over those 3 years, it's delivered a return for investors of 6.81% per annum. So that's what it's delivered, which I think is pretty damn good. We consider the fund to be in the conservative or moderate risk group from an investment risk perspective. So if you then start looking at the conservative and moderate funds in the market, 6.81% over the last 3 years puts it right near the top of what's been delivered across the market in both the conservative and moderate groups. So I think on that basis, it feels like we're doing a good job for investors and delivering you great risk-adjusted returns, which is a bit of a mantra that we have internally around risk-adjusted returns. We're never going to give you 10% type returns for our retail investors, because investing in loans that have that sort of risk, we don't feel comfortable providing to you. So yeah, we stay in that conservative and moderate space for our retail investors. None of what I've said on this page is a reality without you. So thank you to you, our investors, who have helped bring this to life. Alrighty, we're up to the Q&A time. All right, first one. What's the best way to see what other banks are paying for on-call accounts without having to go to each bank's website? I think interest.co.nz probably has the best summary of what others are paying. So yeah, if you go to interest.co.nz, you'll get a pretty good view of what's going on in the market. They have a whole range of different types of savings accounts that they track on there. I think that's a pretty good indicator. Equally, you could go and have a look at the blog post that I wrote last week, which covers the fintechs and looks at the different features and benefits of the different on-call accounts that 6 different fintechs are offering. Interestingly, as we did the research for that blog post, you can see the risk ratings of what each of those fintechs, or where they're placing the money, is actually a bit different. You can see some fintechs are placing it with banks rated at BBB, compared with, for example, Squirrel, which is AA minus. AA minus represents the 4 big banks in New Zealand, so that's where the cash is held. So yeah, interest rate is part of the answer, and interest.co.nz does a good job of describing that. Equally though, make sure you check the risk rating and understand how the returns are being generated for money that you're holding on call. Thank you for that question. All right, question from Jared. Regarding term investments, was sent an offer for a term investment that was 120 days over term, but it had 0 missed payments. What does being over term actually mean? All right, so particularly for our construction loans, I'm assuming they're construction loans that were made an offer on, Jared. We see borrowers that are continuing to make their payments, but they haven't managed to complete their project. So the example that you've got here of a loan that was 120 days over term, chances are that's a development where houses are waiting to be sold. They may have had some delays during the course of the project, which has caused it to run over term. And as I pointed out earlier in the presentation, the market's been soft. So developers, where they haven't pre-sold all of the units in the development, have taken it a little longer to sell than what they might have expected, along with the usual project type delays that a developer might get. So they're still making their interest payments. That's a good thing, but the fact that it's over term, we think is worth highlighting to investors, which gives you the option to accept or decline that investment. Obviously, all of the investments in that term investment portfolio and the managed funds have the protection of the relevant reserve fund sitting behind that loan. Also, Jared, so if you decide you wanted to take that loan, you can do so with the assurance that the reserve funds are sitting there. A question from Rachel: does the dashboard that has total interest earned take into account the unpaid tax? Good question, Rachel. Off the top of my head, I don't know the answer to that one. I'll check that, and I'll perhaps drop a note in my next investor update, which you'll probably see in 2 or 3 weeks' time, sometime before Christmas, and answer that one for you. I think I'll give you what I think the answer is, which is I think it's gross interest. So it's not your after-tax return, if that makes sense. So I think that's what it describes, but I'll clarify that in my next investor update that I write in December. Thanks, Rachel. Yeah, there's a comment from Rachel. Money Hub also provides some good information. Money Hub's website is quite in depth on each of the different products. It's not always as up to date as it could be, so just bear that in mind as you go through it. Yeah, but yeah, good call out there, Rachel. A lot of people use Money Hub. I think they claim to have something like 500,000 views a month onto that website. It has all sorts of different types of information in there, and Squirrel's listed in there. They have some review information there of Squirrel there too. Thanks, Rachel. A question from Irene: does interest on the monthly income fund get automatically added to the investment or paid out into the investor's nominated bank account? Can the investor choose which and how? Thanks for the question, Irene. So the answer is the investor can choose whether the monthly distribution is paid out or it is capitalized onto the investment balance. So that's a choice you can make. And if you've made a choice but you want to change it, you can do that online, or you can get in touch with us and we can change that for you. Where you're having your distributions paid out, they will land in your Squirrel on-call account on the 3rd working day of each month. So if we look at the month of November, the first working day of the new month will be the 2nd of December. So you should see that paid out by Wednesday next week, which would be the 3rd working day. And it will normally drop into your on-call account at about 4:30 in the afternoon or thereabouts. If you're having your interest capitalized, you will see that your investment balance effectively go up with that distribution that's made on that 3rd working day. We also post a note into your managed fund account feed. So if you head into the managed funds item on the menu and look at the activity area, you'll see on the 1st working day, we'll post up what that distribution is in dollar terms for you. And then it's paid. Yeah, so you'll see a notification on the 1st working day of the month, and then you'll receive that money on the 3rd working day of the month. We've shortened that up. I think going back in time, that was 10 days. We've managed to find a way to shorten that up to just be 3 days now until you receive it, which we think is pretty good. Thanks, Irene. And a question from John. What's the best investment strategy with the OCR coming down and the changing global market in 2025? That's a very big question, John. I can give you a few thoughts if that's of use to you. So clearly the New Zealand economy is doing it pretty tough at the moment. Based on a few different stats that you can look at that are reasonably up to date, you might say maybe we've reached the low point for the economy. That doesn't mean it's getting better anytime soon, but it's going to stop probably getting worse. I think that's my read on it. And New Zealand interest rates coming down helps that and helps stimulate a bit more activity in the economy. Puts a little bit more money in borrowers' hands, but the falling interest rate also takes money away from investors. So there's a double-edged sword on that front. Households overall in New Zealand are relatively neutral with interest rates going up and down. If you just look at household debt, excluding investment property, and look at the amount made off deposits that investors hold. So overall, interest rates coming down makes things more viable in the business side of our economy and helps them perform. Farmers, some parts of the farming community are doing it tough, others are doing it well. So I think I saw talk of a milk payout of about $10 per kilo of milk solids, which is really high, right? So dairy farmers probably looking good over the next wee while, but sheep and beef has been doing it pretty tough from what I can tell. So yeah, there's a few ups and downs in different parts of the economy. I think maybe we're nearing that lower point, but it's going to take a while for the New Zealand economy to pull back out. If you compare what happened during the GFC and the New Zealand economy's trajectory out of recession, then there was quite a bit of fiscal impulse that came through as well as monetary policy. So monetary policy means interest rates came down. Fiscal policy means the government spent and put money into infrastructure and things like that, which kind of stimulates the economy. I guess we're seeing, while the government's still spending, they're perhaps not spending in a stimulatory way. So I'm not sure we're seeing the fiscal impulse that we might perhaps hope for to help pull the economy out of recession. So there's a bit of talk about New Zealand. Looking offshore, jeepers, this is anyone's game. Ukraine, Middle East, who knows what China's up to around Taiwan. You can make a case for things being really bleak. At the same time, you look at the way equity markets have performed offshore, particularly US share market, and that's had an absolute gangbuster year and continuing to perform. It's volatile. Maybe that's one way of describing it, John. We'll call it volatile, shall we? Anybody's guess, and I'm probably not the best person to even ask the question. So there's my views on New Zealand, and then offshore. Geez, that's a tough one to call. Thanks, John. Hopefully, maybe there's a nugget in there for you that you might find helpful. Okay, question from John. How do you think the Trump presidency will affect New Zealand markets and international equities? Oh, that's a big question, John. Am I qualified to answer it? Well, what I can do is I can give you some opinions. First of all, I guess if we look globally, there's quite a bit of tension in the world, right? So you look at what's going on in the Middle East, you look at what's going on in Ukraine. The US have clearly got some changes in policy that Trump's intending to deliver into their economy and into their country. There are some signs that, if you read what economists are saying, they think it could be more inflationary, which could mean global interest rates perhaps are a little higher, particularly longer term interest rates. That has an influence on New Zealand and our interest rates, particularly sort of 3, 4, 5 year type interest rates. It has less of an effect on our shorter term interest rates, but higher interest rates in the US probably put some pressure on our currency on the downward side. So lots of things to think about there, and not necessarily a simple answer. Maybe I might just touch then on the New Zealand economy and what we're seeing there. So it feels like maybe we're reaching some low points where things won't necessarily get a lot worse, but I don't think we're going to climb out of this hole very quickly. I guess the best example or most recent example we've got of a situation kind of like what we've got at the moment is the GFC. Coming out of the GFC, two things happened. So first of all, monetary policy was eased. So that means the Reserve Bank brought interest rates down. And so that, tried to stimulate the economy from that perspective. We also saw the government announce new spending. So that's fiscal expansion in those terms. So we haven't actually seen fiscal expansion necessarily this time around. That doesn't mean the government's not spending money. They clearly are spending money, but they're not spending perhaps as much as what we might require to bring or stimulate the economy, maybe if I phrase it that way. Okay, John, that was a big question. Hopefully, I've given you some opinions on that, and happy to take follow-up questions. Thanks for that one, John. And nice way to get underway with Q&A. Question from Danny. On the monthly income fund tax payment, do you sell a portion of the fund to settle the tax? Yes, that's effectively it. So we'll liquidate where we need to cover those tax payments. Plenty of liquidity on the platform, so I don't expect that that's going to be any issue whatsoever. And we have pretty good inflows to the fund. So if we look back over the last 4 months, so since we launched the Squirrel Monthly Income Fund on the Squirrel platform, we've seen about 10 million of new money arriving to the fund each month. Or sorry, that's net new money arriving into the fund each month. So it's grown about 10 million a month over the last 4 months. So even that sort of money helps contribute to making those payments for investors when we wash it through. Thanks for that question, Danny. Hopefully I've answered that for you. Next question from Michael. Can you revise and change your distribution interest from the monthly income fund at any stage? Yes, Michael, you can. So I think you can do that online. If you can't, just email us on money@squirrel.co.nz and we can change your preference for you. So just a reminder for all of you, you have the option of having your returns, your monthly returns from the fund capitalize to your investment. So it just adds to your investment balance, or you can have it paid out to your Squirrel on-call account. And that's up to you. You can decide that. And if you want to change, you can change it. I think you can change it online from going from memory there. If you are unsure or want some help with that, then you can always email us or give us a call and we'll get that sorted for you. Thanks, Michael. Question from John. Thanks for the update. Can't wait for the new on-call features. Me neither, John. I think you'll love it. Seriously, I'm really excited about what it's going to bring. Unfortunately, it's further away than what I might hope for. So I'll be looking forward to delivering that to you all later in the year. Justin's been very quick with his fingers and got a question in, so I'll answer that one before we close up. Is it possible to see what loans have had a credit event in the app? Good question, Justin. That's something that we're thinking about, and we'll look to be adding that in time. I can't promise when that will happen, but I understand why that might be useful for investors. Thanks, Justin. And sorry, I can't give you a more positive answer on when that might happen. Next question from Danny. Back to paying the tax, you mentioned about having funds available. Please elaborate. So as an investor, we will manage that for you. Okay, so I don't think you need to worry about having funds. We'll effectively sell units on your behalf in the fund in order to free up the cash in order to pay that taxable amount. So you don't need to worry about it particularly, unless you want to try and maintain your balance that you have in the monthly income fund. So let's say you've got, I'll just make numbers up, $1,000 tax due. If you wanted to keep your your monthly income fund balance at the level it's at before the tax, then you could deposit $1,000, and that way then we'll manage that for you with that extra money that you pop in. I think that hopefully that answers your question there, Danny. Feel free to follow that up, or you can always email me directly if you have follow-up questions about that. All right, that means there's no more open questions at this point. Thanks very much for investing with us. I really appreciate your support. Hopefully we're delivering what you expect of us, and if we're not, I certainly want to know about it. And if I don't talk to you before Christmas, have a great one. We will have one more investor update come out during December, which will give you an update on our Christmas hours and things like that. And yeah, thanks very much. Catch you later.